let's kick things off, and I want to start by touching on the comment we just got, and in no way do I mean to offend, but the comment said, all things considered, it might be much safer to let you chaps have a money pot and do business for us. Do you provide that service? And I said no. And there's nothing wrong with managing money. Again, I started my career in managing money. But you have to understand the purpose that we have here. And our purpose isn't to give people the shortcut. If that were the case, we wouldn't be doing these events right here. We'd just run a prop firm. The purpose is to help people achieve financial freedom, financial independence, and hopefully freedom of time. And the part that says, and again, I don't, it offends me, but it shouldn't offend you. When I see stuff that says, all things considered, it might be much safer to let someone else manage your money, my answer is a big hell no. Right? I don't think it's safer at all to let someone else be in charge of my finances, right? I am the safest person to be in charge of my finances. I don't have to worry about, I'm not going to scam myself. There's no ceiling. I don't have to pay myself an account management fee. I think we need to be in control of our finances. Now, I'm not saying have that be a piece of the pie, right? I have investments that other people manage. But I do think there is value in having the skill of controlling your own finances. One, if you're good, you're going to outproduce what any money manager is going to make from you. You got to understand that account managers and money managers and you know, all the people that, you know, they run your IRAs and all that fun stuff, right? Their goal isn't actually to make you money. I'm not sure if you guys understood that, right? You do now. Do you know that their goal isn't actually to make you money? Their goal is one thing: keep you around. Because you know how they make their bank? Account management fees. So as long as they're making enough that stops you from saying, I'm pulling my money out, they're going to get their fee. And it's just, how many more people can I get? How can I keep getting that fee? Right? That's where the money is made. So, and again, I don't mean to offend. I don't think it's a bad thing to have others manage your money. Again, I have people that manage my money in other investment avenues as well. But I don't like the word safe. And I think mainly the thing is I don't like that you're giving up so easy. We're just on day one. I don't like the fact that day one we just started and you're already doubting yourself, like, I can't do this. Can I just take the easy way out and give you my money so you can manage it? I don't like that mindset. That's the main thing. I don't like that. It's not easy. Trading is not easy. It is doable, though. It is doable. It is doable. Don't worry, I've been trying this for about 5 years, so still trying, just tired. Have you ever tried with us? You might be trying the wrong things. You might be trying with the wrong people. I don't know. I mean, I would do this, fill out that trader assessment. That might give you a really good idea of what needs to be done. Yep. That's it. Start with index funds. That's the easiest way. Dollar cost average in the index fund. Get you a nice foundation. And you don't need anyone to, it's you'll make more than someone managing money for you. And you'll have control. But yeah, but that's we won't dig too much into that. But yeah, again, I don't mean to offend at all, Sarah. Hopefully this empowers and motivates. I don't mean to be like, shame on you, like you're horrible, nothing like that. No, but I think it is a very good lesson, because I think you're not the only one thinking that way. Hundreds of others are like that. And we see it all the time. And we just want you to know that, like, you don't give up. Don't give up. Figure out what the issue is, what is stopping you from success, develop an action plan, and then go all in on that action plan. And if you go all in on the action plan, doing the things the right way, and again, I don't know what your previous experiences are. We've talked to a lot of people who have just been with people who have told them wrong things. But listen to this 5-day workshop. We're going to write out step by step everything that needs to be done as far as bridging that gap. Go all in. Give yourself time. I think time is underrated. You're giving yourself 5 years already. Give yourself time doing things the right way. But don't give up. Because typically it's you guys have all seen that picture where the guy's like digging for gold and like he turns around right when he's closest to it. It'll be one of those pictures where you're digging. You're like, you're right there. There's a few more things you gotta fix, and then you're there. But it's like, whatever. I'll try something else, and that gold is just waiting for you. So keep at it. Keep at it. You'll keep at it. That's all I can say. So let's organize some of this chaos. And I don't know if we're gonna have time to get on the charts today too much. I want to look at a few pairs, but I have a feeling we're gonna run out of time here. So we'll have plenty more time during the week. But let's organize the chaos, because I just gave you a lot of stuff. I gave you everything that I use in the markets, and some of it is new, some of it is old, some of it you guys have all learned before. It's a massive amount of information. And as the theme of this workshop has been, it's pointless if you don't know how to use it. So you have to be able to organize it. And we're going to get into trade plan development and rules and if-then syntaxes and all that stuff throughout the week. But the first thing, in my opinion, is forming a strong foundation. Now, this is probably the most boring part of trading, right? Because this is the part of trading where you're learning how to trade and it has nothing to do with actually taking a trade. So let me ask you guys this, right? How long would you guys, if you're watching a YouTube video and they're talking and teaching you all this stuff and it has nothing to do with actually taking a trade, right? Kind of like we did in the first, 2 hours of this workshop so far. How many of you guys would just bail? How many of you guys are clicking to the next YouTube video? You're looking on the right-hand column of the screen. You're like, all right, they haven't told me anything. Where's that video that says, oh, super secret strategy? Let me click that one. Most people. And this was my biggest obstacle. Again, I mentioned earlier, I didn't really care about how to trade. I was just focused on what to trade. So I learned all of the foundation stuff, how to read a price chart and all that fun stuff. Like I don't even want to say I learned it. I listened to it. I heard it. Maybe I didn't even listen. I heard it. It went, I saw it. I heard it. It went, I was probably daydreaming about something else. But I paid little attention to it. I put no work into it. And it came back to bite me in the butt later because I spent a lot of money on a course. I spent a lot of time going through a course. I got to the end of the course and I knew absolutely zero because I wasted time on the stuff that really mattered, despite being told that you should pay attention to this stuff. So it is boring, but the most important skill you can have in the market is the ability to read a price chart. Now, why do you think it is? Why is the ability to read a price chart important? Yes, avoid the Rolex, Lambo, gold chain, Tiger yacht guy on YouTube. Hey guys, just trading for my private yacht with my Tiger. Neck kind of hurts because this gold chain's wearing me down. Oh, what time it is? What time is it? Let me check my Rolex. Can't see. Too many diamonds on it. Blinds my eyes. Forex life, right? Half past Rolex. All right, what is the purpose of being able to read a price chart? William says direction. I know you guys got sidetracked by the Rolex talk, right? That's how they get you. Michael says because you can build your own strategy. That's a very important point, Michael. I wasn't going to go there, but the ability to build your own strategy. When we get into the strategy development part of our workshop, that's going to come in key. Um, college is a scam. It's all about the prediction. So this is going to seem like the stupidest question in the world, right? So do we all know how to make money in the markets? If you buy something, what needs to happen for you to make money? What needs to happen? Price needs to go up or down for you to make money if you buy something? Up. If you sell something and you want to make money in the market, price needs to go up or down. Right? Okay. So if you want to make money in the market, price has to move in the direction in which your order is, right? This is going to sound stupid, but I hear it all the time. And I'm sure Jason Charles, I know you've gotten this a lot as well. I've spoken to traders out there who they'll send me a random message and be like, hey, Kill, long euro dollar, looking for 110.83s. What do you think? And like, I don't really care. I don't think anything because it's not my trade. I try not to comment on people if it's their own trading style, as long as they have a back-tested plan and followed it. You know, that's all that matters. So I always fire back with the question, okay, well, do you think price is going to go to 110.83s? And do you know what the answer commonly is? This, like, you can't make this stuff up. I don't know. Or, no, I don't think so. And I slowly stroke my beard and I gather my thoughts and I take a quick sip of the water. And I politely respond to the person, right? I hit the caps lock button so they know I'm angry. So if you're buying the euro dollar and your take profit level, your expectation is your take profit levels at 110.83s, and you don't actually think that price is likely to go to 110.83s, then why the hell are you long? Why the hell are you long if you don't think price is going to go to the level that it needs to go to if you actually want to make money in the market? What are you doing? What are you doing? That's like betting on a sports team that you don't think is going to win. That's like it's like when I bet on Everton to win. Oh, man. It's Do you think Everton's going to beat Man City? No, but I've got all my money right on Everton to win. What? Like betting on England to beat Italy. Ooh, too soon. Still too soon. But it seriously is crazy, right? Because it's all about the prediction, right? The best skill you can have in trading, and the glorious, the sexy thing, the Rolex Tiger Yacht thing is all about the entry, right? I got this cool entry reason. I got this super secret entry reason. And this is something that has shifted in my trading career. Is I don't even think the entry is that important. Now, don't get me wrong. I'm a rules-based trader. I think you need a rules-based reason. Not I think you need a rules-based reason to enter a trade. But as far as, and you guys can answer this for me, if I told you what's more important, an awesome entry reason or the ability to predict which direction the market's going to go into, what do you think is more important? The ability to predict, right? Jason, we were just talking with Sarah about ways of entering, the very easiest, simplest ways of entering investing instead of having people manage your money. And we talked about, trade an index, right? And dollar cost averaging, right? If you look at most indexes out there, let's take the S&P, for example. What does the S&P do historically? Does it go up or go down? It historically goes up, and it will go up forever. It will keep going up, right? So if you can make the prediction that the S&P is likely to go up over time, right? Does it really matter where you enter at? Is your entry that important? Right? Just get in. Just get in. It may not be up tomorrow. It may not be up the next day. Just get in. It doesn't really matter where you get in. Sure, there are better places to get in, but just get in. That's much more important than you looking at a different index and you having this super awesome entry reason, but you don't actually know if it's going to go up or not. You got this cool entry, but if you can't make the prediction, it's pointless. So the ability to read a price chart, technical analysis, becoming a good chartist, it's all about the prediction. That is the most important thing you can do. Being able to know the probabilities, because nothing is there's no certainty in trading, but knowing the probabilities of what direction we're likely to go in, when or where is this move likely to occur at, and then if I'm right, where are we likely to go to? 110.83s. If I'm wrong, where will it go if I'm wrong? So if you break this down to actually kind of trading, right, you can look at it like this, right? What direction we're likely to go in is what? That is your overall prediction of, are we likely to go bullish or bearish, correct? Would you guys agree? Give me yeses or nos. Right? Where is the move likely to occur, right? So this is more of your trade entry. So one is your overall prediction of what's likely to happen, right? Next is your trade entry, all right? If we're likely to go bullish, when is that move likely to happen? Is it after a breakout? Is it after a pullback? Is it after a high and tight flag, right? That's more of your entry, right? Kind of pinpointing where you want to get involved in the market. Where will I go if I'm right? What do you think that is? When we practically apply that to trading, what do you think that means? Where will price go if I'm right? That is your targets. Where will price go if I'm wrong? What do you think that is? Your stop loss. When you put all these things together, you can set up a trade. You have a directional bias. You have an area or a reason for entry. You have your reward. You have your risk. You can then look at it from a risk management perspective. Do I have the correct ratio between potential risk to potential reward? And you can determine if this is a good or bad trading opportunity. It's all about the prediction. It's all about the prediction. Now, in order to make these predictions, you need to know a very specific skill. And that very specific skill is, how do markets move? And I love this part of the session because it's always simpler than people think, right? People have this complex answer of how markets move. Markets move in three ways. They go up, they go sideways, they go down. They go up, they go sideways, they go down. You look at any market, crypto, commodities, stocks, maybe not gold this morning, but they go up, they go down, they go sideways. Understand that first and foremost. Don't overcomplicate the situation. Now, you're saying, Nikhil, that's pretty easy. I wish the markets looked like these beautifully printed arrows. The reality is they look more like this. They go up, but they don't go straight up, right? They ebb and flow. They go sideways, but they just don't go straight sideways. They ebb and flow. They go down, but they just don't go down, do they? They ebb and flow. So where this is simple and easy to understand, this is a little bit more complicated. But there's a reason that this part is complicated. Charles says, trader, will it go up or down, Akil? Yes. Maybe sideways, which sideways is just slightly up or slightly down. This is complicated to many because they don't invest the time in reading a price chart. And how many Tier 1 members do we have currently sitting here? Give me a yes if you're a Tier 1 member. Trial member, premium member, doesn't really matter, right? I think you guys would all agree that this is probably the hardest part of trading, is just the basic ability to read a price chart. Would you guys agree with that? This is where most people struggle. This is where most people fail. And the number one reason for why they fail is because they don't invest enough time. Reading a price chart is a skill. Reading a price chart is a skill. And in order to train a skill, to develop a skill, it takes a lot of practice hours. My oldest is learning to play basketball right now, right? We started over in the summer for the first time. I gave him basketball. I told him to shoot it. It went backwards. It was embarrassing. I started questioning myself. I was a pretty good athlete. I started questioning myself. Is he really mine? Because he shot it and it went backwards. It was bad. I yelled at my wife because she's bad at basketball, and I said, he must have gotten this from you. He must have, not from me. Not disrespect the Stokes name like that. But guess what this young fella did? He's been outside practicing, shooting, and now he's making buckets. It was a very long and frustrating learning curve for him, where there was a lot of we have a driveway that is like on a massive hill. So when you miss, and if it goes down that driveway, you've got to like break out in a full out sprint to get it. So there was a lot of sprinting down the hill and falling and getting the ball. But you fast forward, 3-4 months later, he's gotten pretty good. Why? Because he's invested time in learning the skill. He goes out there and he practices. The fear of not running down and getting the ball is big. And he's just been consistent at it. And he's given it time. And that was the one thing we talked about. I said, because he got upset, I don't like basketball. I'm like, you got to give it time, man. Like, you're not going to be good right now. You give it time. And what's cool is as he gets better, you can see the confidence in him. And the more confidence he has, the more he wants to practice it. The more he practices it, the better he gets. And trading is the same way. The problem is, right? And Jason asked this question in the assessment, right? Honestly speaking, are you willing to work on this skill? Are you willing to work on it? And the honest truth is that a lot of people will say yes, but they don't really mean it. And they'll be like me. They'll learn it, or they'll listen to it. They'll hear it. They'll move on to the next course. Right? 2 courses later, we have the blueprint course in our course selection, that's where all the strategies are at. And there's a reason it's our 4th course, right? The secret is you need to know everything else before that course for it to make any sense, right? The strategy has no purpose if you don't know the other stuff. That's why we put it 4th. That's why we make you go through 3 courses first. But we get all the people that rush through it. I'm just going to skip right to that blueprint, and they learn all this stuff, and then they start trading AB equals CD patterns with aggressive limit orders and blowing money left and right. So I don't say that to scare you away. But I'm not a shady salesman. I'm not here saying trading is easy, do it. You'll be great. No, you can be great. But it's going to take a lot of time, a lot of work, and a lot of effort. And it starts with the basics of reading a price chart. And again, this is what I skipped over in the beginning of my trading career. I skipped over this, and I paid the price for it later, as I had to basically go all the way back to the beginning and relearn, right? If you learn how to read a price chart, read the markets, you're going to be able to make predictions. You may not have the entry, you may not have the exit, but you're going to have the most important skill, which is being able to predict the likelihood of a directional movement. And if you can do that, the rest is easy to add on in comparison. But this part takes time because, again, in the books, it looks like this. Oh, a trend is your friend. It's so easy. And I'll show you some pictures of a beautiful trend when we teach it. Reality, it looks like this. And that's a little funky. So let's talk about reading a trend. I'll make it very, very easy for you. Right? We talked about there's 3 ways the market moves: up, down, sideways. Let's talk about an uptrend. So an uptrend happens, or a bullish trend, when you have a series, all trends happen with a series of extensions and retracements, right? Extensions are going to be the longer moves in the direction. Retracements are going to be moves in the opposite direction, so moves that go backwards. So in an uptrend, our extensions are going to be going up, our retracements are going to be going down. So we have an extension up, followed by a retracement down. We have an extension up, followed by a retracement down. And a very easy way, remedial way to think about this is that in an uptrend, you have a series of higher highs, right? See these white lines? Are the highs getting higher? Yes. And a series of higher lows. See these white lines down here? The lows are getting higher. That's how you know we're in a uptrend or a bullish trend. Also, extensions must be longer than the retracement that comes after it. Right? That's kind of common sense. If this retracement is longer than this extension, you'll no longer have that series of higher lows. A downtrend is the exact opposite. Now it's funny because whenever I do a presentation like this, I'm like I can just show them one direction, but it's actually proven that it's and I'm gonna forget which way it is. It's easier for our brains to pick up on uptrends than downtrends. And I don't know if it's a conditioning thing, if it's we're used to reading a certain way. I don't know why that is. I've read it before in some trading psychology book years ago. But make sure when you practice, make sure you do practice both. And I believe it's that way, Charles. If you know, it might be the opposite. But let me know. Maybe downtrends are easier than uptrends. I think you might be right, actually, Charles. It might be that because I think when we read, we're used to reading from top left to bottom right. So our eyes are more used to kind of going from top left of your screen to bottom right. It might be that. So I think it's like, yeah, I think selling opportunities are easier to find than buying opportunities because, again, it's top to bottom. But anyway, Charles, you're weird if you're the opposite. You're a weirdo. But downtrend, same thing, right? Extensions. Extensions are going to be longer than your retracements, right? Instead of a series of higher highs and higher lows, you have a series of lower lows and lower highs. Now, let's go to... Actually, I think I skipped a slide here. Oh no, I left the slide out. But we can do the same thing with this one, right? We're going to talk about rotation and trend. We're going to talk about how to identify a trend. I must have deleted a slide. But the rules that we have here for identifying an established trend is that we need a 3-point move. Write this stuff down, right? 3-point move. We need an extension followed by a retracement, followed by another extension. Unless we have that 3-point move, we're not going to consider ourselves to be in a trend. Does that make sense? How many moves do we need to be in a trend? Pop quiz. 3. And what you're going to see us do is we're going to label these moves, right? So our first move, right, when we get to this swing point, so the point where the downward move ends and the retracement begins, this is going to be called our ISL. That stands for initial structure low. So that's the first low, the initial low in a newly formed potential trend. This retracement, we're going to have it as an outside return, pullback, retracement. They're all the same thing. You can call it whatever you want. A fuzzy pony for all I care, as long as you know what it means. Now, on our second extension, right? And what must this extension do? Can it be equal or does it have to put in a lower low? Could it be a shorter low? Could it be an equal low? Has to be a lower low. This is going to be our third move, right? The second extension. That is going to give us our new structure low. And why the new structure low looks a little bit different than the other ones, why it's in orange, is because at that point, we have a confirmed trend. So at this point, we can say that we are in a bearish trend when we get this 3-point move. Does that make sense? Perfect. Now, a trend is going to continue until the previous outside return or pullback is violated, right? So we come down here for our new structure low. We have another outside return. We put in another new structure low, right? The trend continues. And then on this move right here, do you see how we violate the previous outside return here? Yep. That is going to invalidate our previous bearish trend and put us into what I call a rotation. So a rotation is just another word of consolidation, right? Where we don't have a defined uptrend yet, but we could be getting into going one, right? Or we could be starting to get into one, right? So let me ask you guys this question. So we take out this outside return, we put in an initial structure high. How come we can't call this a bullish trend? Obviously, the market is moving bullishly. How come we can't call this a bullish trend? Tier 1 members, don't answer if you're a Tier 1 member. Don't spoil it. Yeah, we don't have the 3-point move. We could easily just be in consolidation. And depending on what market you're in, you may be in consolidation most of the time. Different markets move differently. Stock markets, and it's going to be particular to what stock you're looking at, they tend to trend more. Indexes tend to trend more. Forex tends to consolidate more. I don't really know what crypto. I'm not big in the crypto market at all, so I'm not really familiar with it. Crypto, is that more? I know the big ones are more directional, obviously. Crypto in general, any crypto traders out there? Do they tend to? I know your Bitcoins, your Ethereum, those are the two I know. But the other ones, do they tend to trend, consolidate? No idea. It's a very young and emotional market, so I would guess trend. But figured I asked. But yeah, this is not going to be a trend. It's going to be a rotation. So after this initial structure high is printed, we have our pullback, which is our outside return. This is going to be our second move. And then once we violate our previous initial structure high, we have a new structure high, and we can officially say that what? That we are in, we are in an uptrend. Any questions on reading a trend? I do want to look at, we're almost over time right now. I do want to take a look at some charts. I promise we'll start off first thing tomorrow looking at the charts. I just went over today. Maybe we'll just save all the chart work for tomorrow and make sure we end on time here. But any questions on reading a trend? Perfect. All right, let's look at a few charts. I promise I won't be more than like 10 minutes. Let me load something up here. Give me a second. Again, how to make predictions, putting together all of the clues. But let me see if I can load something up real quick. I want to show you an example of at least one counter trend and one continuation. And we'll have plenty of time. I think I'm set to do all chart work tomorrow, if I remember correctly. So we'll spend the first hour tomorrow just looking at charts and practically applying what we're doing here today. But I do want to give you some stuff here. Let's take a look at. We'll do one. Move this over here. Find my charts. Okay, here's one right here on dollar Canada. So this is an interesting one right here on dollar Canada. This is going to be something that would be called a counter trend trade. So can you guys all see my screen just to make sure? All right, so price action, right? This was actually a trade we took a couple weeks ago. I took the bullish trade from down here. We're actually looking for a breakout around here as well. I didn't have a chance to get involved. But looking at real time, right? This level right here, you can see the green and the red VS1 levels. This is going to be a previous level of structure, right? A previous level of structure. Price action is coming up to that level of structure, which is going to give us what's called a decision point. And later on in the session or later on in the workshop, we'll learn about if-then syntax. But this is where the if-then syntax is so powerful. And Steven, we were just having this conversation the other day when you hit me up on Skype, where you want to act like a programmer, right? If this happens, then I expect this. So when I look at this level of structure, and we'll start with kind of the macro picture, the bigger one. If we get to this higher VS1 level, then I need to see how price action reacts at this level. If price action gives me a reversal reason, right, and that's going to be a specific candlestick or candlestick combination, then I could look for a move to the downside. If price action violates this level, then I can look for a move to the upside. And that's how we set up our projection. So let's take a look at this and just run kind of an example. And maybe this becomes a trading opportunity throughout the week. So we have this key level of structure, right? You can see that our most recent move in the market is an extension down, a retracement up, and an extension back down, right? That puts us in what type of trend? Extension, 1. Outside return, 2. Extension, 3, right? That 3-point move, right? So if we were to violate this trend, we would need a violation of our outside return, right? So this level right here would need to be violated. That's that yellow line, right? So if we get a violation, right? Let's say we get a higher high, higher close here. I got to use here because my shortcuts are kind of weird right now. But let's say we get a higher high, higher close, right? Would we still be in a bullish or a bearish trend, excuse me? No, we would be in rotation. So we would need to look for two things. We would either need to look, and this depends on the aggressiveness of your trading style. You can either look for the first chance entry on the first pullback, or you can look for another confirmed trend to occur before looking to get involved. All right, we won't worry too much about that right now, but let's go back to the basic form of making prediction. So once this bearish trend is violated, I'm no longer making the prediction that price is more likely to continue lower versus higher. We can go either direction. A question I want to ask myself is, okay, well, if we were to continue higher, then where are we likely to continue higher to? And what I'm going to look for is my next level of structure. I have a major level of structure up here. This is based off my higher time frame, right? But I also have a minor level of structure. Look, left structure leaves clues right in this area. Can you guys see this? I'll draw a little box out there for you. See this little double bottom right here? Yep. So I can make the prediction that if we violate this level, I can look for a trading opportunity that goes from here. Wrong tool. Sorry about that. Again, I'm not using my shortcuts here because I got a weird thing with my recording device going on here. But I can look for a move from here to about right here. That's my trading opportunity. And it could be further than that, depending if we get a retracement and whatnot. But that's my trading opportunity, just based off that prediction. Now, the rest of it is you got to fill in the blanks, right? What do I need to happen? What is my entries and all that fun stuff? Where do stops need to go? But just touching on kind of the basics here, does that make sense how that prediction helps us out in trading? I can't on a new Camtasia, Stephen. I've been trying for 3 weeks. The new update does not allow me to edit the shortcuts, unfortunately. Yeah. Does that make sense about the prediction, guys? Give me a yes or no. I'll give you this opportunity. We'll talk about a counter trend opportunity. Okay. So let's look at another opportunity, right? So that's a bigger picture opportunity if price action violates that level, right? So currently, price action has come up to a minor level of structure. Again, this red VS1 level right here, right? We have not violated that structure. We didn't talk about this, but in order to have a technical violation, we need a higher high, higher close. So the candlestick needs to close above that level. When you look at how price is reacting at this previous level of structure, you can see that we did spike above that level, but we did not close above that level. And what actually happened is as we got to this level, we created, this may seem familiar, we might have talked about it earlier. Anyone see it? What did we create? Yeah, there we go. Double trouble, double top. Now again, a double top by itself doesn't really mean too much for me. A double top at a previous level of structure. Now we're getting more powerful. Oh, what else do we have? What else? What type of tool did I mention that we take a look at here? Or did I use? Did I mention the RSI to you guys? Look what happened on this initial top. This is the first top, right? RSI, overbought, right? My overbought is set to extreme measures, right? I'm an extremist. My overbought is 80 and 20 versus the default of 70 and 20. Again, I think the default RSI is going to be a 14 period with a 70-30, a 70-30 overbought, oversoldness. I use a 7 period with an 80 and 20. Doesn't mean you have to use that. You can use whatever you want, but just kind of in case you're following along, your RSI looks different. So we had a market overbought all the way at 87. So well overbought. We then retraced. We then came up and retested this level, giving us a double top. Now here's an example of diversions, right? So price chart is giving us basically equal highs. Indicator, oscillator is giving us lower highs. That's another clue we can add to the puzzle. We got a double top, which is great, but doesn't really mean much by itself. We have a double top at structure. We have RSI overbought. We have bearish divergence on it. What we've done now is we've violated, so we've confirmed the double top by breaking and closing below it, right? The little V point here. And now we've come back up to retest this previous level of structure once again. Now, for you guys that are members or been following us along for a while, what is this called? A 2618/kiss of death. So this is a level where if we get a reason for entry, this is going to be a good short, a really good short. Now, let's see how good your memory is. And again, Tier 1 members, don't chime in. I know you want to brag and stuff. Don't chime in, right? What would be a good entry to use, do you think? What else might we see? We spoke about it earlier when we talked about candlesticks. Let's see how good your memory is. I don't see someone mention a cipher pattern. I don't see a cipher pattern in there, but we may be looking at different things. I don't see a cipher anywhere, but I could be wrong. I don't see one unless we're looking at different time frames. All right. Do you guys remember? I shut down my PowerPoint, right? Do you remember something that looked like this? Remember what this thing is called? Three-bar reversal. Perfect place to look for a three-bar reversal. We have a high momentum candle coming right in the structure. We can see that there is selling interest, selling pressure at this level. How do we know, right? Because the bulls tried to spike up and they're getting currently rejected. We get a three-bar reversal. That's going to give us a very good clue, along with the other clues we added, that the bears are in control, or the sellers are in control, and we may see a continued move down. So something to pay attention here on Dollar Canada. This is an hourly chart. It's going to take at least 2 more hours. That's kind of the cool thing about knowing your trading style, right? You don't have to sit here and watch it. I know that if I'm trading a 3-bar reversal, I need 3 bars, right? I got 1 so far. I know this current bar is not going to close until 12 o'clock. I know that the next bar is not, and we're not going to get a lower, low, lower close. If we do, there's no way you're trading it because the risk is going to be out of whack. But I know the next bar is not going to close till 1 o'clock. So guess what you can do? If you're new, you've got 2 hours to review your rules and look through trading lessons and make sure you're doing everything right. Measure out your risk reward 10 times just to make sure you got it. If you're experienced, right? Jason Greystone sets his alarm for like 1 o'clock or 2 hours from now. Says, I'll come back with like 5 minutes to spare and then see if we got the entry reason or not. If we do, I'll enter. Everything's measured out in advance. If I don't, I'll wait for the next opportunity. Doesn't take as much. You don't need to sit here for 2 hours and watch it because guess what? You can't do anything anyway. If you're a rules-based trader, right? If you're a rules-based trader and you need a 3-bar reversal, is there anything you can do in the next 2 hours? Aside from like cause yourself mental stress from watching it tick up and down. Is there anything you can do? Seriously. And you don't even need to set an alert, right? Because you're time-based. There's nothing you can do that will benefit you. The only thing you can do is stare at it, get FOMO, fear of missing out, enter too early, and end up not getting a reason for entry and being involved in a bad trade where you lose money. And again, addition by subtraction. There's nothing you can do. So you go away. You go away, you come back in a little under 2 hours, you reassess, you remeasure risk reward based on the current candlestick, and then you ask yourself, yes or no, can I take the trade? If the answer is yes, you take it. If it's no, then you wait. I know we haven't talked about rules-based trading, but that's a difference maker, right? Trading isn't staring at your charts for 12 hours a day. That's gambling. It's stupid. Go do something more. Go play with your kids. Go work on a project. Learn to play the guitar. Do a workout. Actually pay attention to the meeting you're at your job. Do something. But those are 2 good opportunities. One more before I let you guys go today. This is one we talked about in this past week's video. What did we got? NASDAQ, I think. This was an example of a wedge pattern. Again, kind of like Jason said, my analysis on the NASDAQ all year has been pretty simple, Grayson. I've just been yelling into my computer, buy. That's been my analysis all year. Buy it! Buy it! But Akil, it's retracing. Buy more! Buy more! Right? So the same thing, right? We saw a consolidation pattern here, right? This should look familiar as well, right? This is a wedge pattern. When we add a directional move before the wedge pattern, it becomes a what? Becomes a what? Come on. You guys paying attention? Yep, it's a flagpole, so it makes it, a pennant pattern. Yep. If we just do a basic analysis of trend, right? Look at that. Directional move. And again, this starts a while ago, right? So you can take it off from down here. But swing low to swing high, outside return. Swing low to swing high, or new structure high, outside return. New structure high right here. What is this called? Outside return. What do we have right here as we go up our flagpole? New structure high. What is this little retracement called? I know it's repetitive and boring. Outside, this is what it takes. Outside return, right? Now we just violated, right? Higher high, higher close. We just violated our previous new structure high. So what did we just put in? It's a small one, but what did we just put in? A new structure high, right? We're retracing right now. What is this going to be called? Come on, let's all say it together. Outside return. What would we expect to happen next? A new structure high. Guess what you guys just did? You made a directional prediction. The hardest part has been done. The next question is asking yourself, how can you get involved? And those are going to be up to the specifics of your trading plan. So it's like we talked about, you could be a wedge pattern trader, right? Or a pennant pattern trader. You can come back, you can look for the retracement. Anybody see any entry reasons right here after the retracement, after the pullback? There's that 3-bar reversal again, right? That could be an entry reason right there. If we come back down, you can get a double bottom. Again, so many ways you can enter. That's going to be personal preference. But the point is, the prediction is the most important thing. After the prediction, you're basically adding the accessories to it. All right. Looking at the RSI, wouldn't you be a bit worried at entering there? Why? What about the RSI? should worry me. I'm not saying you're right or wrong, but we just want to make sure there's a reason for it and we're not making an emotional decision. So there has to be a reason for everything we do. So we can't just say that, hey, RSI this, RSI that. Divergence. So this is actually a positive sign. This is called, I don't think we're going to get lower. We don't. From this one we do. This would actually be called hidden divergence. So this would actually be a positive sign for a directional move. When we can have a lower low on the RSI, or excuse me, a lower low on the RSI, yes, with a higher low on your price chart in comparison to the previous lows. That's called hidden divergence, right? That's actually a positive sign for a continuation. So hidden divergence is a little bit confusing because we're always used to looking at the RSI in a very specific way. So we're not going to touch on it here because I think it's going to hurt more people than it helps. But this would actually be a positive sign with the RSI. Yep. Another one of those little clues. Doesn't mean anything by itself, but a positive clue here. So, all right. Did you guys find value in this today? We didn't do what I intended to do, but I think we did what we needed to get done, which I'm happy about. Definitely. Perfect. Now, remember what we talked about earlier. You probably have a lot of questions. Write them down for that Q&A session that we're going to have at the end of the week. But here's what I want you to do. It's a lot of information. If the goal was to teach you, we would focus on one thing for the entire session. There's no way we would teach you all of this in a single day, right? So what I want you to do is, as I mentioned earlier, right? Hopefully you wrote this down. Hopefully you drew it out, right? I want you to practice each thing we looked at. I want you to find 10 of them. I want you to find 5 in a bullish direction, 5 in a bearish direction. Every single thing we talked about, 10 examples. Prove that you really want to be successful by doing the work. Because we're going to come back, we're going to do some chart analysis tomorrow. And for those of you that do that homework and you familiarize yourself somewhat with what we're looking at, these concepts are going to connect a lot easier. For you guys that don't, I don't need to do it, right? You're going to be lost. You're going to be lost tomorrow. And you're not going to get what you need to get out of these sessions if you're lost. So do the work. Any time frame, switch it up. Do some on the daily, some on the lower time frames. You'll probably get more opportunities on the lower time frame because there's more frequency there. But yeah, time frame doesn't matter. I didn't mention this, but all markets move the same, regardless of market, regardless of time frame. So the 1 minute moves exactly the same as the daily, just a little bit more noise down there. But yeah, any time frame you want, any pair you want, any market you want, switch it up, have fun with it. But do the homework. How many opportunities did I say find? 10? How many in each direction? All right. I know who paid attention. All right. We'll see you guys tomorrow. Until then, plan your trade, trade your plan. Take care.